more than just business news, we're news for business people.
Good afternoon. You're watching Bloomberg Quint Live. These are the headlines at 12. Markets inch higher with both benchmark indices registering steady gains. Broader markets advance as well as India VIX cools off. Reliance Industries gains after the company commissioned the world's largest refinery off-gas cracker at Jamnagar. Titan gains in trade after it forecasts a robust third quarter. Brokerages give their thumbs up to the guidance as well. And security has been stepped up in Mumbai in view of a Maharashtra Bandh called by protesters in an agitation that began in Pune on Monday. And with that, it's over to Darshan Mehta for Hot Money.
Thank you, Alex. Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gives you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our experts then, Ashwin Agarwal of Newberry PMS, Savi Kalra of Target Investing, and Savi Jain of 2.2 Capital join us on the show. Thank you all for joining me on the show. Today on Hot Money, we'll discuss counters like NMDC, Eicher Motors, Reliance Naval, and we asked the guests their top pick for 2018. Let's move on to the first stock, and that is NMDC. The counter over the past few days has been buzzing. They've raised the prices of the iron ore for Jan 2018. For the lump, it's by 19%, and for the fine by 22%. So clearly there is supply disruption that is happening, and that is why this price hike has happened. What should one do with NMDC? I'll start with you, Savi. Mass underperformer, as far as it was a nifty stock one point of time, hasn't done much, but is it the right time to buy? Are valuations attractive for NMDC?
Yeah, so we as a fund do not invest in commodity businesses or PSU stocks, and NMDC is both. One is that it's very difficult to predict the price of the commodity. It's a function of global supply and demand. Like you correctly said that they recently took a price hike. This is because there's a significant increase in demand from China because of increase in steel production. Now there's enough iron ore production globally, and I think that production will adjust and prices will then revert to where they should. NMDC is clearly a quasi-monopoly business, and despite that they have not been able to perform well like other PSU companies like Coal India, etc. And there are various reasons for it. One is that the company runs on the whims and fancies of the government. One day they decide that they should forward integrate into creating a steel plant, and the next day they decide that they should divest it. And the dividends also are decided by the government. Then there are cap on production on various mines. There is evacuation infrastructure is not adequate. They invested around 150 billion rupees in setting up this huge steel plant in Chhattisgarh, which is close to 15,000 crores, and there was cost escalation, and that increased to 250 billion rupees. Still the plant has not been commissioned, and that 250 billion is more than half the market cap of the company. And now the government has decided that they should divest the steel asset, and they've appointed bankers to do that. Now I feel it's very unlikely that there will be a big buyer for this, because there are a lot of good steel assets available in NCLT cases, which will be available for a bargain. So that's a huge overhang on the stock, because once that happens, there will be significant cash flow in the company, but the likelihood is not great. Overall, yeah, the valuations are decent. It's trading at 10 times forward earnings, and 4-5% dividend yield. Balance sheet is clean, because there are huge iron ore reserves that it has at its disposal. But given all these factors, we are neutral on the stock.
What about you, Samir? What do you make of NMDC? Are these concerns valid?
So I'm neutral to it. I'm a little bullish, but the only thing is I want to watch the December volumes. See what has happened since October. They have increased the prices of the lump and the fine by around 34% each. But the volumes, if you see, they've gone 29% down. So there's a 5-6% kind of a growth which the numbers might show. So last quarter they showed a growth of 639 crores on the absolute, which was around 4% of the revenue, and 600 crores of that growth came from pricing increase. So it's purely right now running as a pricing gain. That's all. Because whenever the quarter comes, the results don't show that much of upside till the time, you know, the volumes also pick up around it. So if the volumes still continue to degrow by 22-29%, that's a big volume drop. So I'm still neutral. I want to see the December volumes before I take a decision of being bullish or not. The only plus point which I see from them is they are now getting into tungsten. See, when you talk about defense, when everyone's talking about the defense manufacturing and all, tungsten is the main important raw material which is needed for these kind of manufacturing. Now, in India, there is no tungsten material which is being mined by anyone. They are going to have a MOU with the Vietnamese firm where a Vietnamese mine will be under NMDC. So that will give a huge upside to that kind of a business, which will be a new growth driver. And they have diamond mining also increasing in Madhya Pradesh. So, and iron ore is still very, you know, the problem is the cap on the production. That cap slowly will keep on increasing, where I think the prices may degrow a little, but I think if the volume picks up for the mining capacity, I think they have a good upside.
So mining, you'll wait for and watch.
I'm carefully watching the mining volumes.
Okay, so it's two neutral views that are coming in. Ashwin, what do you make of it?
So I'm bullish. Firstly, I think I agree with Savi. Commodity companies are bad. PSU companies are bad in general. But I guess if you look at NMDC, it's just been trading at a crazy discount. So I know prices are down 70% from their highs. The only risk is the government prices the iron ore in India. So if they could freely price their product, considering they're a monopoly and stuff like that, it would definitely be value. It would be a blind buy. But since they can't, you have to deal with a little bit of uncertainty. But at 10 to 12 times earnings in a relatively very almost crashed iron ore market, I think you could take a small position of like 2-3% in your portfolio. There's a very little risk, there's no debt and stuff like that. There's genuine assets, so worth a bet.
So it's a bullish call that's coming in from Ashwin, but the other two guests are slightly cautious on NMDC at this point of time, despite them saying valuations are fine. Samir is indicating that he'll wait and watch the volume number before taking any kind of further steps on the counter. Let's move on to the next one, and Aisha. The counter has been rather weak ever since it came out with its December numbers. In fact, there was a growth that was there both on the Royal Enfield as well as commercial vehicle, but the growth trajectory has come down significantly. Samir, what do you make of Aisha Motors? Is it a good bet or valuations are too expensive?
So I'm bullish on the counter since it was 10,000 rupees. So main reason is the sustainable of the growth, right? So they have been, it's more like I expand the capacity, the sales is already there automatically. So it's able to fill that pending sales more quickly. Now the two triggers which they have done is last 1.5 years they've been more aggressive on the international expansion. To suffice that even if tomorrow the domestic growth slows down, they're able to, you know, pass it on to the international operations. So they have around 25 centers today. So that suffices a good amount of Royal Enfield going and building a brand over there. So, and especially when Royal Enfield was an international brand earlier when they bought at a very steep valuations. The Volvo Aisha commercial vehicles saw a very big jump in December. That was around 78% on the heavy duty, and all the absolute numbers on the sales side are favoring them for that compounding of the growth. And they are gaining a big market share on the passenger and the goods side. So they had a 10% market share in October 2016, which has come to a 13% in October 2017. So that 3% of market share gain in the passenger and plus 1% market share gain on the goods is coming out to be favorable on them. They are planning a 1250 crore capex, so that also helps them to compound that growth. See, valuations wise, if you see, they have done around a 350 kind of a EPS today. So even if you analyze it, it's 700, and at a 20-30% kind of a growth, it becomes 910 for next year. So it's right now at 29-30 times. So I don't think so it's been expensive, because past 5 years PE has been around 35, 32. So comparative to past performances, it's been there and the sustainability of growth has been there. So I'm bullish on the price.
Okay, what about you, Savi? Do you agree with the views that Samir has put forward?
Yeah, so the commercial vehicle part and the export business both are very small part of the current market cap, and in terms of revenues also they are a very small part. The main obviously chunk of the business comes from the Royal Enfield business, and the growth numbers as you have seen has gone down to 15% from highs of 40% a few months back, and that has been consistently dropping. This was around 20% in the last month. And this is because the waiting period has declined, and if you look at some of the core markets like Maharashtra and Karnataka, the volumes have declined instead of growing. And this is because over the last 5 years the volumes increased 10x, and the brand appeal and the exclusivity that was there earlier, in owning a Royal Enfield, it kind of has tapered down to a certain extent.
Okay.
If you now also the replacement cycle for this kind of a product is pretty large, right? So a customer who has already bought this product is not likely to be buying it in the near future. So that has been one of the biggest issues for Royal Enfield. If you look at the valuations, they're trading at more than 40 times trailing earnings, and for a growth of 20%. That kind of a valuation is not warranted. We see a significant derating in this kind of a stock if these volumes continue to be where they are. The volumes would have to increase significantly. The growth would have to increase significantly to justify the current valuation. So we are very negative on
Okay,
this
so valuations and the growth is something that is of question mark. So a bullish view and a bearish view, which side would you be on?
So I'm neutral. So I love the company. I think in two-wheelers, that would be the brand to own. Like, it's definitely an amazing brand that they've created in Royal Enfield. Volvo also, their sales are, I think they're as big as the two-wheelers, but the margins are wafer thin compared to two-wheelers where they make 20% margins. So like 90% of the profit is contributed by the two-wheelers. I have an opinion, like if I already held the stock from a long time sitting on gains, it would be a hold for me, because nothing's wrong per se in the company, execution and stuff like that. But if I had to put new money in, I wouldn't buy it at these prices because it's really high.
Okay, so valuation seems to be the concern for both Savi as well as Ashwin, but Samir does believe that valuations are fair at this point of time, and growth will come in both on the Royal Enfield front as well as the CV cycle, and exports is something that he is betting on. Let's move on to the next one, and that is Reliance Naval. Wild moves coming in on the counter. It's up almost 70% from the recent lows. The entire ADAG pack is something that is buzzing in trade. No news as such apart from the only commentary that Anil Ambani gave on Reliance Communication, but the entire pack is doing well. Savi, what's happening in Reliance Naval? Do you have any clue?
Yeah, so I don't think there is anything happening there. If you look at the there's no business. I mean, the operating revenues are less than the interest cost for the company. It's become you're in a bull market when companies against whom insolvency proceedings have been initiated, and those stocks rise 40-50% over a matter of week. When banks need to take a huge haircut, it is very unlikely that there will be any residual value left for equity shareholders. The entire defense indigenization story has largely been just all talk and very little action on the ground. If you see, most of their revenues come from, small orders of patrol vessels for naval, and those big orders of warship and submarines, they're elusive. There's nothing happening there. So overall, there's no way, with 10,000 crores of debt on the book and 2,000 crores of maybe contingent liability, it is very unlikely that there will be any equity value left for the shareholders. Even if you take the peak profitability of FY 2014. The stock trades at 25 times EV EBITDA. So there's absolutely no case for investment in this company unless Mukesh Ambani has a change of heart and he just decides to, buy this company at 4 times EV that it is currently trading at.
But what's the order book situation like? Do you have any idea?
The order book is, there is one is committed order and then there is order pipeline. These 5-10,000 crores of lumpy orders that the government has been talking about for the last several years, and because of which Anil Ambani actually bought this company a couple of years back from the erstwhile promoters. Nothing of that is happening on the ground, and there are small orders of patrol vessels which will not make enough profits to even service the interest. So I don't see any case for investment in Reliance.
Ashwin, do you share the same concerns on
Yeah,
Reliance?
completely. I mean, if you read the annual report also, there are some great stories and like stuff like that, where they're saying there's a 3 lakh crore order size, like what industry size, but like it's a challenge of when it will come or if it will come, and there might be other players. So like L&T also makes submarines, so they'll have to bid them out. So I mean, there are plenty of other companies to buy out. Stay away.
Okay, stay away. Sameer, again, concerns valid for...
Yeah, concerns are valid. See, this run-up was any which way driven by the RCOM. So the whole pack went up. The Reliance Capital, everything just went up. And meanwhile, what happened, the Bombay business of the power, which was owned by Reliance Power and then Reliance Infrastructure, that was sold to Adani and that was closed. So that makes Reliance Infrastructure debt-free at certain levels. So maybe that kind of an impact went over here, that they will be able to borrow and lend it to these guys so that they can even get them out of the IBC. So that kind of a hope might be coming out. See, any which way, even if the defense orders kick in, they are not something which you can deliver in 6 months. They take at least a 2-year, 3-year kind of a timeline. So in that also you need more debt to manufacture that vessel. So where will that come from? I really don't know. But the only point is there is an upside risk. If it comes, and again if something gets sorted out, there might be a change of view on the whole system as such. So that is the only upside risk, that if something materializes, see, everyone's negative on it. So even a small change of the system or the company or the orders, anything changes.
But the price it's quoting at, it's not.
No, not right now.
distressed.
I'm talking about, see, any which way I'm talking about pre-ARCOM deal
true,
happening.
true.
I'm not talking about today. So that way I'm any which way negative on it.
Okay, so it's more like a negative view coming in. Mainly stay away from Reliance Naval is something that is being spoken about by all our guests. And since it's the start of the new year, we'll ask our guests what they believe could be potential, investment opportunities that they like. Ashwin, what do you like? Do you like Sun Pharma? What makes you bullish on Sun Pharma?
Like disclosure, I hold the stock. I just think there's a lot of negativity surrounding pharma companies, which warrants some negativity because the US business is down 40-50%. But I would say if you start from today, taking Sun Pharma's case specifically, they've invested close to $1.5 billion in specialty molecules, none of which have been commercialized. So if the way the pharma game works is if even one of them turns out to be a blockbuster, I think it would more than compensate for the investment. So that's one, the specialty pipeline. Two is Halol. If it gets cleared, you'll see much more approvals, much more ANDAs, much more like the base business will improve. And three, I mean, I guess the price discounts a lot of negativity. Like, so the price not assuming anything extraordinary from the company. So in which case, there's very little risk on a two-year basis. I don't see it being below where it's trading at.
What about valuations? Are you comfortable? It's
very comfortable.
It's not the cheapest though, because you have your Aurobindos and Lupins and Dr. Reddy's, which are trading much cheaper.
It's cheapest relative to pipeline. Like they have a pipeline in which they're going after $1 billion markets of while Oro, and they're still in generics. So they have invested a lot of money in the pipeline. So basically the money has already been invested, but it's not earning anything on it. So think about like say Geo a year before it launched. Basically you've put all the money. Now if it works out, that's the thing. If it works out, then it's a really good call. But if it doesn't work out, I think the price is kind of not assuming too much of a workout from the investment.
Okay, any potential targets that you're looking at for Sun Pharma?
So it would depend on how many molecules, like it'll be a very varying
So you're just playing on the specialty business of Sun Pharma?
Specialty business and the base business going up once Halol, because most of their ANDAs have been filed through there. So if that gets approval, the base business should also increase.
So
okay.
I just have one point to add there. I was looking, in fact, today I was looking at the relative valuation with some of the larger US generic companies like Teva and Mylan. and there is a difference of 2x in valuation. So a lot of what you have said, maybe that warrants some kind of a premium, but a 2x
So
valuation.
one of the
when
things is they are not in India, which is the one of the really fast-growing markets. Sun Pharma has 33% of its sales from India.
So-
the other is their ROE is a little like India is the cheapest cost destination for global pharma. So by default, their margins are higher. So if they do compete on sales, Sun Pharma would capture a bigger cash flow than a Mylan would. Even if they were selling the same drugs, their margins are necessarily double. But yeah, and I guess I would say Teva, you could take a 5% call cause people are so negative, rightly so they have so much debt. With Mylan, yeah, Mylan are safe companies, you can take their valuation, but I think Teva is definitely under, like it's been whacked like crazy because there was a question on its survivability. But I think generic companies are here to stay, and I could be wrong, but I guess at this price, that's a bet I would want to take.
Okay, so Sun Pharma is the bet that Ashwin is
Yeah,
taking.
also like if dollar increases because they're quoted in rupees, dollar being down so much, basically there's like a wall of worries. So if they climb it, it's going to go up a lot. But if they don't, I don't see the price, like I don't see that much of a drawdown from a 1-2 year perspective from where it's trading at today.
Okay, Savi, you like Muthoot Finance. What's the rationale here?
So I must first disclose that we hold it in our PMS. In current markets, a company like Muthoot Finance, which is the largest gold finance company, trading at less than 2 times price to book, less than 13 times trailing earnings with 1.5 to 2% dividend yield. It is always generated, most of the part of the history it has generated upwards of 20% ROE. So we believe that it's a deal at these valuations. Growth is a concern in the near term, and that's because of lack of credit offtake from the informal segment due to GST and demonetization. But we believe that will eventually come back, and also there's a lot of informal lending happening to these customers from other informal sources. So a lot of that will move to the organized segment. In terms of all the other NBFCs, this is one of the most liquid assets that NBFC can lend against because there's a readily determinable price, and you can easily auction the collateral. These guys are lending at less than 75% LTV, and the tenure of the product is much shorter at 3 to 4 months. So compared to say other NBFCs which are lending against illiquid assets like say a used CV or even a mortgage which is not easily liquidable. So given all these facts and the valuation that the company is trading at, we are pretty bullish on Muthoot Finance.
What about which are the immediate competition, Manappuram, or are there others also? Which would be the immediate competition?
So a lot of banks had tried to get into gold finance earlier. They burned their hands and then got out of it. Some of them still continue to lend, but it's a very small part of their AUM. Manappuram is obviously the credible next competitor, and we also hold Manappuram. It's slightly more expensive than Muthoot, but we believe Muthoot is a superior business than Manappuram and should be trading at a higher multiple than Manappuram.
So what's the valuation like between Muthoot and Manappuram?
So Manappuram is I think around trading at 14 times earnings, and Muthoot is trading at 12.5, 13 times earnings. Manappuram is trading at more than 2 times price to book. Muthoot is trading at less than 2 times price to book. And the growth of Muthoot recently has been higher than the growth.
And any reason why it's trading at a discount to Manappuram?
So there has been, Manappuram, there's been some buzz around some kind of a strategic deal happening. Then the promoter has been buying in the open market for a very long time. Overall, we don't believe there is any reason why Muthoot should be trading at a cheaper valuation than Manappuram, and that discount will in fact turn into premium very soon.
Just one final question is there hasn't been any history of corporate governance issues with Muthoot Finance, or there hasn't been none?
So on the corporate governance, there's not been anything material. There was once a income tax raid, but they came out clean. Basically, the company was not recognizing a lot of these NPA. They were recognizing provisioning which they should not have. They were taking extra provisioning, and as a result, they were paying lesser taxes. That was a conservative way of operating, but the tax authorities did not agree. There has been no corporate governance issues, but in 2011 to 13, gold prices, crashed significantly, and these guys were lending at, 90% LTV. So there was a lot of losses that these companies had to take. Now the RBI has put a limit on the LTV to 75%. So that risk management is now robust. Also, the tenure of the product, which was earlier 1, 2, 3 years, is now, they reset the product at every 3 or 4 months. So there is no risk of gold prices falling that much in a 3-4 month period. So overall, I think it's a safe bet, and in current markets, definitely, very difficult to find these kind of valuations.
Okay, so Muthoot Finance is something that Savi is bullish on. And finally, Samir, your pick is Sona Koyo. What makes you bullish on this?
See, what happened, the company has around 50% market share in the steering wheel for passenger vehicles, Maruti being the biggest client of it. The issues with the company was always corporate governance. So 25% was held by Sona Group, 24% was held by JTKT, which is owner of the Koyo steering systems in Japan, and 7% is owned by Maruti in the firm. Recently, Sona sold out to JTKT, which made it around 43% in total. Then JTKT came out with an open offer to the public for 26%. So right now they hold around 70% of the firm now. So first of all, the corporate governance issue historically have moved out. So the new promoters are Japanese. So that kind of gives it a little upside. Second, we were looking at stabilization of the quarters. So now last 2 quarters, there have been reduction in debt by around 40%. If it goes at the same pace, next 2 quarters, I think it will become a debt-free firm. So they pay an interest of 6 crores, they have a profit of 6 crores. So that interest which gets out of the books directly comes to the bottom line. So it doubles the standalone profits. Second, their main problem was the associate company which they have in that firm, which is for driveline. So that's another important component of the passenger vehicle. So, and they didn't have any price hikes from the clients past 3 to 4 years. That was again a corporate governance issue where people were trying to push the promoter for a price hike. So now that these things have changed and even the numbers have bettered out in September quarter, I remain bullish that 2018 will be a year where they get debt free and the systems and the pricing and the margins expand drastically as compared to last year.
Okay, so it's a bullish call that's coming in on Sona Koyo from Samir. So before we wrap up on the show, here's a quick recap of all the guest views on the stocks that we've covered till now. Okay, Ashwin, Samir and Savi, thank you so much for joining me. With that, it's a wrap on today's Hot Money. Ask BQ comes up next. Stay tuned to Bloomberg Quint.